Please be advised of the disclaimers.
Hey everyone, welcome back to my channel. It's Sai with Pinnacle Trading here. Today we're going to take a look at the stock market overall view, the 5-minute recap, and see what it's doing right now, what we can look to do when markets go down or up, and I'll show you kind of how I look at things in my analysis on the overall market. So let's jump into it. So we saw a pretty decent drop in S&P 500 today, almost minus 2%, almost minus 10-point drop on S&P 500. So am I really worried about my long-term positions? I've been kind of scaling out, and I'll show you what that is, but I'll kind of show you why it's not really a big time to panic yet, and why people are getting scared in the markets, and how you can avoid the emotions and the roller coaster. I teach a lot of that in my course. The main thing, we look at the fundamentals and the psychology of trading and investing and being in the stock market itself, but I'll kind of share you some of those compressed tips right now today. So let's look at the weekly chart on this one. We can kind of see sideways movement on this, nothing crazy, nothing going on too much, and markets can't really make their decision on to go up or to go down confirmed. But today we got a nice confirmation. Today is Wednesday, January 5th, 2022. And again, Happy New Year to everyone. Hope everyone is doing well. So we kind of see markets finally take a decision and come down. So let's look at the overall yearly chart on this one. So we can kind of see that markets are at the 468 right now. Let's just call it about 470 area. And we see this 50 SMA, 200 SMA kind of not being tested too much yet. We see the 50 tested, but not really huge breakdown below that. So first thing I want you to do is add the 50 SMA and the 200 SMA. If you already use Thinkorswim, all you have to do is click on these indicators, go over here, click on that tab, add the simple moving average. You can add it by just simple moving average. Just click on that, it'll add it right there, and then you want to change that to the 50, and then you want to change it to the 200. So add 2 of those right now, and I usually make the 50 blue and the 200 red or salmon color, whatever you want to call it. That's how I like to look at this. So when we hit the 50 SMA, that's kind of a test saying, hey, markets are trying to pull back, sell off, and cool off a little bit. And once they bounce off that, then we have a confirmed uptrend. There's no reason to panic. Once they start going below and then bounce back up and stay over and then bounce over, then I'm not really too worried. When we start worrying about a sell-off or a small correction is when it goes below 200. So that's why in my analysis that I posted in the charts and analysis tab in the chat room, that's where I called this out. I did this on my phone on the go. It was just showing simply that 475, 480 is the top level and 450 is the support. Unless things break below 450, I'm not going to be really worried about my positions at all. So that's kind of what I called out. Resistance is the high level that it needs to break. Support is the low level, is where we have like a baseline that we look for things to hold over. So that's where I'm looking at. So until the confirmation of 450 break is there, then we don't really need to panic. And so that's what we look at right now. So we can kind of see that on the yearly chart, it continuously tests the 50 SMA, bounces off of it, goes down a little bit more, but it never really touches the 200 SMA since last February. So more than a year, we've just seen the continuous movement. When we look at the 3-year chart, after last year's panic sell-off in March, April, we kind of don't really see the 200 SMA tested at all on that one. So there's really no need to panic. So when people say, oh, markets are going to crash or markets are going to correct, there's really no need to panic until we see a confirmation of break of the 200 SMA, and then we see it reject like it did last year or year before in 2020 when it broke below, I'll zoom in here, when it broke below 50 and 200, came back up, rejected off that area, and just kept going down and down. So when we see movement like that, when it comes back up and then comes back down and breaks below the support level again, that's where we look for the big sell-off and for confirmation of a downtrend or a market correction, whatever you want to call it. It's definitely not a market crash. This was just panic selling due to COVID news and all of that during the pandemic and everything, but that's a pretty decent market correction. So same thing, that's what we're looking at again. So if you want to look at the overall chart, like the 20-year chart, same thing happened. Look at 2008, 2009, same thing. Broke below 50 and broke below 200, and then it just keeps going down. Of course, chart didn't load here, but you can kind of see the same pattern. You see the same pattern right here. You see the same pattern right over here. So that's why I don't really panic, don't really worry about the markets, what if they're going to crash until I see a confirmation. Remember, confirmation is key. It kind of tells us that there's a support resistance level, it needs to break or go above, and then we make our moves off of that. And to scale out of positions, if you are holding something, let's say you got in on the dip over here, and scaling out and scaling in is basically dollar cost averaging over time. So I look to buy in when it bounces off the 50 SMA. That's where I look for kind of a small sell-off just to get in and then add more money every month, and then look to, scale in on the positions. I don't just buy at once and sell them all. I like to buy in small chunks, build up position. Same thing when I exit. So when I see markets right now as they're headed to 50 SMA, that's when I see this kind of top being broken down and a sell-off like that, that's where I'll look to scale out of my long-term positions. What you consider long-term, maybe years or decades, but what I consider long-term is going to be in years, and maybe 5 to 10 years, 15 years. It can be a couple years, so you can consider that long term, but I'm more of an active investor, so I'll base it off my chart analysis and technical analysis to kind of beat the S&P 500 return and kind of get a little bit more gains on that one. And of course, this is more on the investing and maybe a swing trading side. This isn't day trading or any fast movement action. So that's why I say don't panic right now until we see confirmation of the breakdown. And if you want to stay updated on all these levels and alerts, make sure to join the chat room. Link is in the description of the video below, and I'll also put that in the video as well on how to join. So if you head over to the channel, you can click on the Discord button right over here and to join the chat room, but the link will be in the below. So that's basically how I look at the market, how I look at why not to panic, how I scale in and scale out of positions, and kind of identifying support levels. So just support levels and resistance levels will be mainly based on 50 and 200. So if they're not breaking, there's no reason to panic or kind of just panic sell and then kind of say, oh, I missed out on the run up, missed out on this. If you just play it by technical analysis and do your due diligence on what you're playing, then it kind of plays out. And you can also look at other stocks, same thing. Like let's look at the big ones like Apple. That's a big growing stock. Even if you want to take Tesla, which is a lot more, has more momentum, you can kind of see the same thing. Anytime it breaks 50 SMA, it goes down, tests the 200 and doesn't really get there, so it bounces back up over there. Unless it's going below 200 and going down a lot, that's where we see kind of a big sell-off. So when we see the 50 SMA break and we see the 200 test over there, it doesn't really go below and then comes back up. So unless it was going below and kept going, then the stock will be really crashing. But being that it went from 180 to 80, that's a big drop, more than 50%, but we don't really need to say, oh, this stock is going to go bankrupt or it's going to go to zero, unless we really see it go below 200 and really break down below. But if you want to look to add on great places, that's where we look on a yearly chart. When we see the pullback of the 50 SMA, that's where we look to add. If it breaks below, then we can look to slowly scale in. And then once we start going above, it starts testing resistance, that's where we look to scale out. And I teach all of this in my course. So if you want to grab the course, head over to my website. That's pinnacletrading.us. And head down over here. You can also click the button join now for free to join the chat room as I've showed you, and then you can grab my course which teaches everything from the foundation, technical analysis, charting, how to trade and invest, and how to become a confident trader and cut your learning curve when you're entering in the stock market. And some of my secrets to you also include the lifetime access to the course and the VIP. So I hope this video helped you out on how to avoid panic in the market itself. And if it helped you out, make sure to hit the subscribe button and the like button, and also make sure to share the video with your friends and family, which might help them out on how to get started with trading and investing in the market itself. Thanks for watching, and I'll see you in my next video.